All right. Well, good afternoon, everybody. There is the bell. The market just closed, and this is Scott Thompson, and we are here for our stock investing for beginners lesson number 5. We're going to follow up our plan presentation that we did last week and go over the what to buy, kind of an introduction to the fundamental analysis concepts today. But before we do that, I want to go ahead and remind everybody our presentation today is for educational purposes, not a recommendation or endorsement of any particular investment, any stock, or any particular strategy. Schwab does not recommend the use of technical analysis as the sole means of investment research. We will be using the paper money platform in Thinkorswim, and that's a little different than the live version. There's some significant differences there, so be aware of that. As always, we talk about stop losses. There's no guarantee that execution of a stop order will be at or near the stop price. And occasionally we talk about fractional shares. Be aware that there's some specific risks associated with fractional shares. You want to be aware of those risks before you trade. As always, investing involves risk, including the loss of principal, and past performance is no guarantee of future results. Let me go ahead and jump over here into our lesson series. About 4 weeks ago, I guess 5 weeks ago now, we started or restarted our stock investing for beginners series. These are the different 8 lessons that we cover, and today we're talking about lesson number 5, which is what to buy, an introduction to fundamental analysis. Our agenda for today is to go over some of the differences. Just a brief discussion on technical analysis versus fundamental analysis. We're going to go over some different fundamental analysis concepts and indicators. What we'll probably do right after that is jump over to the Thinkorswim platform. I created a scan looking for a few of the fundamental parameters that we're going to talk about, and I'll show you how to do that scan. I've actually posted the link or the URL, the little code that you need to share that scan. It's there in the chat, so you can grab that and put it in there. I'll show you how to load that into your Thinkorswim in just a moment, but we'll go run the scan, then we're going to place a couple trades, and then I want to come back around and talk about some of the different fundamental analysis components that we covered in that scan. And so, kind of the third thing on the agenda, running scans and screens, we're probably going to make that number 2 today, and then we'll come back and visit some of the slides on those individual parameters, depending on how much time we have. So let's just jump right in. There's basically 2 schools of thought in the market. You have technical analysis and fundamental analysis. Technical analysis is the study of that historical price action and volume. We try to decide if there's a trend present and what that trend is. Fundamental analysis, on the other hand, is just taking a look at the company's financial statements, balance sheets, income statements, looking for what someone might consider value or potential growth. And there's careers dedicated to fundamental analysis where they might be analyzing particular elements of fundamental analysis. So if you want to take a deep dive into that fundamental analysis, we're just going to barely scratch the surface today. But we have a couple great webcasts that we offer where we do take a deeper dive. One of them is called Growth and Value Stocks. That's on Wednesdays. James Boyd teaches that at 11 a.m. on Wednesdays, and he'll take a deep dive into fundamental analysis and looking the difference between growth and value. We also have an investing in dividend stocks webcast on Thursdays that Cameron May teaches, and he'll take a dive into that side, the income side of the fundamental analysis. So if you want a deeper dive there, you a couple webcasts that you can, look at there. Before we get going here too much farther, I want to give a shout out to Simone and Rojo and Will and Greg and everybody else, Sharon, Robert, that are here joining us. I have Connie there in the chat, and so give a shout out to Connie. You can follow both Connie and me on x.com at Scott Thompson CS or at Connie Hill CS and get some additional information there. But so let's talk about this fundamental analysis. One of the things I do want to say, technical analysis, the concept really is that anything and everything that can affect the price of the stock is already doing so. That's kind of the main belief in technical analysis. Fundamental analysis, like it says here on the screen, is going to take a deeper dive look into the company and try to determine whether that's a good company or a sound company, how the management does, and all those different things. And like I said, there's a whole career line, years of study that people dedicate to fundamental analysis. So, whichever school of thought works. In our webcast here, we're actually combining the two. We use some fundamental analysis and then we use some technical analysis to help us time our entries into the stock. But let's take a look here at what fundamental analysis is, give you some definitions, give you some things to look at here, some things to remember, and then we're going to go jump over and take a look at a scan that I created in Thinkorswim. So what is fundamental analysis? Well, it evaluates the underlying fundamentals, business segments, financial management, past performance, peers, so on, attempts to determine the stock's intrinsic value. We also have, if you go to our bite size content playlist. I believe there's a video on there that specifically talks about intrinsic value that Barb Armstrong did. It's about a 7-8 minute video on determining the stock's intrinsic value. We won't have time to do that today, but that's a great little video of how, you know, some fundamental analysts will look at a stock and some of the different parameters they use to determine that intrinsic value. It also looks at a variety of financial ratios and valuations on the statements to see how the company's performed and you know, how it's done so far and how it could potentially fare in the future. Okay, and again, this is, you know, past performance with good fundamentals doesn't mean that'll continue. Financial statements, if you're brand new to fundamental analysis or brand new to you know, analyzing a company in general. Some of these things may be new. I think most of you are probably familiar with all of these. But a financial statement or your income statement, balance sheet, and a statement of cash flow, it's really an interpretation of how the management is doing with everything going on in the company. Financial indicators and ratios is how solid the company is compared to its peers. They create those ratios so that you can, well, excuse me just a minute. All right. You know, so you can compare your different companies to each other. It's a great way to look at that. And then intrinsic value is the stock overvalued or undervalued. You're probably familiar with technical indicators that might show that a company's overvalued or undervalued, but there's also a way to do that with the fundamental analysis. All right. Now, the income statement, on the other hand, this is a quarterly or annual financial report that summarizes a company's revenue, expenses, gains, losses over that specific period of time. Usually it's a year, but very often you're looking quarterly information as well. You might refer to this as a profit and loss or P&L statement. It shows how the bottom line of the company is doing. You know, what's the net profit or net loss? It provides those key indicators to help provide, you know, profitability, overall financial performance. Again, a great tool to compare to other stocks when you're trying to decide which company to purchase. Now, the balance sheet is a different type of income related statement or financial statement. It's you know, all publicly traded companies have to show their company's assets, liabilities, the shareholder equity. Those are the three main components of a balance sheet. And it's basically a snapshot of the financial health of the company. It follows fundamental accounting equations, you know, assets equal liabilities plus shareholder equity, indicating what a company owns, what it owes, and the value of the owner's stake in the company. And you know, investors, traders, and mostly investors though, use that balance sheet to assess the company's liquidity, solvency, risk, and overall financial standing. All right. So just kind of scanning here through some questions. So if you do have some questions, you know, go ahead and post those. Connie will answer those for you. Now, the statement of cash flows, again, we have income statement, balance sheet, statement of cash flows. This is a financial report depicting the cash that has moved into and out of the company over a specific period of time. It's categorized into three main categories or activities: operating cash, investing cash, and financing. Public companies regulated by like the SEC are required to file this information as well. And, you know, it provides insights into liquidity, efficiency, overall financial health, just like the balance sheet does, and gives a little bit deeper insight there. So these are those main types of fundamental analysis components and what fundamental analysts use to evaluate a company and what you and I can use to evaluate companies. And so you know, what are some things that people are looking at? What are the differences? We have some quantitative concepts and we have some qualitative concepts. And then what we'll do is we'll go, run a scan, see if we can find some of those. And I'm not going to talk about all of the fundamental components mentioned here on these next two slides, but I have a summary slide that shows the different fundamental criteria. There's 12 of them that I would give you a homework assignment, maybe to go search the internet and get some more information about those, including, what type of scores or values investors look for in the different components. But so key concepts: financial statement analysis is analyzing a company's income statement, which is revenues, expenses, the balance sheet, assets, liabilities, and equity, and the cash flow statement, which is cash generation and usage. Valuation ratios, and you've probably heard of some of these, like price to earnings, price to book, assess if a stock is overvalued or undervalued relative to its intrinsic worth. Profitability ratios measure a company's ability to generate earnings. Return on equity, this is probably one of the main ones. You'll hear of return on assets as well, but return on equity, ROE, is very common. We're going to use that in our scan today. Leverage and liquidity ratios. This evaluates the company's debt levels, debt to equity ratio, the ability to meet short-term obligations and things like that. Growth analysis might look at historical revenue, earnings, and cash flow and see what those trends are. All right. Now, qualitative wise, a business model, understanding how a company operates, its products and services, the target market. These are a little bit more qualitative. Sometimes you'll hear companies moat, which is the competitive advantage, identifying what a company, what allows it to maintain a strong position against competitors. Is it easy or hard for competitors to join that market and succeed? So that's called the competitive advantage, or you'll hear the term moat sometimes. Management quality, that's evaluating the leadership team's competence and track record. Industry analysis, explaining broader industry trends, regulations. So when you're looking at different companies, you also want to be aware of what's going on in their sector or their industry, because some industries, as an example, might have a higher debt to equity ratio as a normal component of that industry compared to another industry. So it's useful to compare industries and sectors as well. And then economic analysis, considering the macroeconomic factors like GDP, inflation, interest rates, and those things might impact a company's performance. Again, some companies might be more sensitive to interest rates changes than others. So again, you can go take a deep dive into this fundamental analysis area. Me personally, I'm more of a technical trader. I subscribe to the idea that anything and everything that can affect the price is already doing so. There's a lot more smarter people out there in the market than I am. And so, they provide that information with the internet. This information that used to literally take weeks or quarters or months to get to individual investors like you and me, we can search on the internet today and find out a lot of this information, just like those big companies and the big analysts can do. So that information is absorbed by the price action in the company, and so again, there's these two schools of thought. I'm not promoting one or another. I just want to make you aware of them. You'll have to decide for yourself. And I think most of us like to have some combination of these two, technical analysis and fundamental analysis, to kind of help us make our investing decisions. And, as it says there at the bottom, past performance is no guarantee of future results. And another thing to remember is, just because, something's uptrending, which is technical, doesn't mean the trend will continue to go up. Just because we do a deep dive in fundamental analysis and determine a company to be good, or profitable, or what looks to be strong fundamentally, doesn't mean that can't change over the next week, day, quarter, right? In fact, we've seen some companies that miss on their earnings expectations, and they get beat up for that. The stock trend could change or continue to get worse, and things like that. So hopefully this little review is helpful for you. Let me show you. This is probably 12 of what I would consider some of the more popular fundamental analysis indicators. And you can see those there. I'm not going to review all 12 of these today, but you can see which ones they are. We're going to look at about 4 or 5 of these when we come back from looking at our scan: earnings per share, price to earnings ratio, return on equity, and then we're going to take a look at the dividend payout ratio and dividend yield. But the other ones, you'll probably want to take some time, do some research on your own. There's a great resource on the schwab.com page as well, where you can get a glossary of these different things and definitions. And the internet's got those as well for the different ratios. And there's others. This is not a comprehensive list. So, taking those 5 I just mentioned, or 4 of them, let's jump over to our Thinkorswim page, and I want to show you a scan that I created just this not too long ago, and I called it the fundamental scan. Okay, I'm going to open up my left side here. This is the code that you need to load this in. Oops. This is the code that you need to load into your Thinkorswim. I'll show you how to do that in a second. To load this scan criteria, and then you can run the scan as often or as frequently as you like. And then these are the components of that scan. So if you copy this code, and again, it's in the chat right now. Connie can maybe repost that, but it's there at the top of the chat page. I'm going to copy that. And over here at the right, this is how you load that scan in, is you go to setup, go to open shared items, and then just paste that code into the shared item URL. Click preview, and this is the name I gave it when I saved it. So it should come up on your side and say fundamental scan as well. You can import it here, and then some people like to click open shared item after you press import. And what that does is just loads up a separate page. I'm not going to do that. But after you click import, then what happens when you go to your scan tab, if you come over here on this setup scan line there to the right, let me shrink down my gadgets window here. Right, kind of where that little flame is. If you click on there, it'll say load scan query, and it should be listed here in your in your personal batch. You see that right there? So, if you missed that, go back and watch the recording of what we did there to get that. But these are the components. I put in a stock price of at least $20. Didn't have a maximum on there. The volume, I had 250,000 shares per day. And the reason for that is just to keep some liquidity in there. Price to earnings ratio. Now, I'll give you these ranges that I put in here, and we'll talk about them briefly. But 6 to 20 is the range that I used. Early on in my investing career, I learned this range of 6 to 20 is what some investors consider to be a good value, maybe even undervalued a little bit. So this is a really fast way to consider some companies that, if you're uncomfortable paying, 50 times earnings or 100 times earnings for some of these stocks that are really high flyers, very volatile, these tend to be stocks that aren't as volatile and that are looked at as a better value. Now, whether that's true or not, or whether that good value stock continues to go up in value, we don't know, right? But this is just a range that I think is quite popular with what I would consider more of a value or a value type of look, all right? Return on equity. Now, this one's kind of interesting. Again, when I first started investing, one of the things I learned about was return on equity. And I have a slide. We're going to come back and kind of define these a little bit more, but return on equity is what it sounds like is, what kind of percentage return do people expect to get on the equity that they're investing? And so 18% was kind of one of the minimum, but that was more of a growth parameter. So what I've done here with our search is we've combined some growth and some value type of components. And not only that, we're doing a little bit of a dividend yield, which is an income component. So remember a few weeks ago, we talked about the 3 different types of investors. growth invest or investing styles, growth investing and value investing and income investing. And so I've chosen three fundamental components, one from each one of those types of styles, and combined it into a search. And I just ran this in the S&P 500. You could do this in really anywhere that you wanted to, but that's the scan is set up to do it in the S&P 500. And then when you scan that, today I got 28 results out of out of the 500 stocks that are in the S&P 500. Now, the results page here, I actually added some columns. I'll show you kind of how to do that very quickly today, but not every column. So, the default's going to have last, net change, or percent change in volume. But if you click on the little gear over here and hit customize, then you can go in and choose different things. I have PE. Um, so right there, PE ratio. If you're looking for dividend yield, you can type in div and you'll get dividend yield. You can get dividend payout, both of which I have there. And then we have return on equity. And so those are the different things. And then you click on those and then you just add them. And then I move these columns around a little bit so you can resize them and get a better view. All right. But this is the scan that I created. Again, that scan's available. Connie's reposted that there. Again, just real quick, if you just joined, to get that into your Thinkorswim, then go up to Setup, open Shared Item, copy that URL in here, click Preview, and it'll name the scan. Then you want to import it into your Thinkorswim. And after you've done that, when you go to the scan page, come over here and you can load the scan, and it should show up here in your personal list. Then you just click on it and it'll load all those parameters in there. You click scan, and if you ran it today, this is what came up. Now, what I want to do is take a look at two of the stocks. I looked at every single one of these, and you can do that for homework, but I want to look at EIX and DG because these two stocks met not only the fundamental parameters that are here in the search, but they also meet our two green arrow technical buy signal. So I wanted to, take a look at those, place a trade or two, and then go finish up the class by just giving some more details about those different, fundamental components. All right. So let's take a look at EIX first. Let's go to the chart. And I have a 1-year chart up here. And so EIX, you can see, was trading about $50 last year or 12 months ago. Right now it's about 77. So it's had some pretty good upward momentum. The last couple of days, it looks like it may have broken out of this resistance line that it had at about $76. And the stocks above that rising moving average that we talked about last week, and the MACD just gave a green arrow. Now we could have got that yesterday or today. Looks like we're about the same price. If you get the closing price yesterday, would have been about what's that? 76.58. Today we're at 76.68. So this one was interesting to me because it not only has the decent fundamentals that we just ran the search, but it also gave a technical buy signal, which is called a breakout when it closes above resistance. And it's quite common now for the stock to test this area as the new support. And at least the last couple of days, it looks like that test, it went down below both days, but closed back above both days. And so it looks like it's trying to hold that support. Now, we don't know if that's going to continue or not, but it's a valid entry signal based on our technical analysis that we talked about in the trading plan last week. And it meets some of those fundamental criteria that we just went over today. So let's place an order on this one, and we'll use our position sizing rules that we introduced last week as well. So to buy this, if you just kind of right click right here about where the closing price is at 76.78, do a buy custom with stop. That'll create an order down here at the bottom, and we can decide, how many shares to buy, where to put our stop. So let's do our stop first. The 1% below the 50-day moving average is there at 71.38. So that's where our stop's going to be. And I'm going to change that to manual just because if I change this number here, I don't want them locked up. I want to put it there where I want it. So again, that was 71.38. We'll put that in there, and we want our stops to be good till canceled. And again, no guarantee that it'll get stopped out at 71.38. That's going to trigger a market order, and it could be filled significantly lower than that. The closing price today is 76.68, so we're going to go ahead and put that price in here. And the market's closed now, so this order will be good for tomorrow, even if it says day. But I often like to make this order good till canceled as well. Now, a couple ways. We talked about position sizing briefly, yet last week. Our risk per share, again, some terms that you need to understand. Our risk per share here is the difference between 76.68, our entry price, and 71.38, our stop price. So that looks like it's about $5.30. If we were willing to lose up to $50, or we position size on $50 of risk on the trade, that would mean that we could maybe buy like just under 5 or 10 shares, right? Because if we did 10 shares, we'd have $5 and or $51, no, $50.30, or yeah, that right. And so that would be right about that neighborhood. But if we buy 10 shares of this, that's going to be $768 or $66. And so we also determined that we don't want to invest more than like 5% of our portfolio value in any one position. So the maximum on that, if we have a $10,000 portfolio, would be about $500, or in this case, we could probably do about 9 shares. So I'm just ballparking that. I'm going to put 9 over here on my purchase. I'm going to click this little link right here and lock those together. And then if I hit confirm and send, oops, I don't want to do 9 shares. That's too much. If I look right here, my buying power effect, that tells me how much it puts in there, and it's late, so my brain's not working. So how many shares can we do here? About 7 shares. Sorry about that. So 7 shares, yeah, that's 536. And again, one of the things that I did learn early on, I think risking less when we trade is usually a better way to manage our emotions that are associated with managing and self-directing any type of money that you do. So I'm going to go down one more share here, and that'll put us just under 500 at 460. Again, we're risking about $5 per share there. So, but the maximum we want to invest is $500, and that puts us about that level. So I'm going to put this in our 2 Green Arrow stock group and send that order for tomorrow. All right. Now let's take a look at another one on the scan. We had Dollar General came up, has a PE ratio of 17, return on equity of 18, dividend yield about 2%, payout ratio is fairly low there at 33%. And so let's take a look at that one too. Dollar General, DG. Now, Dollar General is kind of interesting, and the reason I picked this one is because it was downtrending, and it looks like it actually changed that trend. And we can see that, we define an uptrend. We'll talk more about technical analysis details next week, so be sure to join us next week. But an uptrend is defined by higher highs and higher lows in price, and this has started to kind of stair step up. We just made 3 days ago a new short-term high in the trend, and we're making short-term higher lows as well. And the MACD went green fairly recently here. So, and the moving average technically is rising. It's just barely rising, but it is rising. And so this meets our buy criteria. Now, again, this trend may change back to sideways or down, and it may stop us out here. But this is another stock that came up in the fundamental scan that also meets our technical criteria. So I wanted to trade this one as well. Let's draw a little resistance line right in here. This looks like it struggled to get above this maybe 119.65 level. Broke out pretty nicely there when the green arrow happened on the MACD. And what do we know about old resistance? Well, old resistance often becomes new support. And so the way that we know and see that that's happening is after the stock closes above resistance, we'll see the stock come down and test or touch or trade around this area. And then we see what the buyers and sellers do there. Yesterday this came down and almost closed right at that line. And then this morning it actually gapped down a little bit, traded a little bit lower, and then rallied. And so it looks like, again, not guaranteed this will stay this way, but it looks like it's trying to hold that support level. And so we'll again use our technical entry signal, which is the two green arrow on the moving average and a green arrow on the MACD, to help us get into this position off the scan that we ran and created to do the fundamental analysis to help us find some stocks that are maybe a little bit lower value, or not lower value, but undervalued a little bit, uh, and that are meeting some of those other criteria, including a dividend. Now, again, dividends are not guaranteed to continue and they can change, but be aware of that. But how do we place the order? Well, again, we just right click about there on the closing price, do a buy custom with stop. That brings up our order. My brain's working a little better now. If we do 5 shares, we're going to be about $600. So we can probably do about 4 shares here. And I'm going to unclick this link again, change this to manual because I want to set my stop at that 1% below the moving average, which is 110.47. And then we want to make that day good till canceled. Then our entry price, sometimes, when you right click, your cursor's not quite exactly at the close, but the rule we use is to put the order at the closing price, which is 121.28. So we'll go 121.28. And again, I like to make that good till canceled. And we'll buy 4 shares, hit confirm and send, and we just double check this buying power to see if we're below our $500 maximum investment. We also want to check kind of just mentally or visually here. If we get in there at 121 and stopped out at 110, we're risking about $11 per share. $11 times 4 is $44. And so we want that number to be smaller than that $50 kind of risk per trade idea that we talked about. And the reason that we do that really is just to help us, if we're really comfortable losing $50, then we don't freak out or panic when the stock doesn't go up immediately. If we're over position sized or we bought too many shares and the stock's first action is to go down, maybe a day, 2 days, 3 days, we kind of get that little panic or that emotional tension in our chest, and we tend to want to get out and sell because now that loss that we're really comfortable with at $50 is actually showing like $100, $150, $200, $300, and we can't handle it. And oftentimes, you see if you know anybody that's done this before, oftentimes because the stock doesn't do what we wanted it to do immediately, we tend to kind of panic, we over position size, we sell it, and then what happens? A day later, 2 days later, 5 days later, 3 weeks later, the stock actually did what we thought it would do. It starts trending up. It stays above our stop that we had, but we're not in it anymore. We took a loss on something that, would have played out the way we expected and wanted it to, but we couldn't handle that little wiggle, that little volatility there at the beginning because we over position sized. So, if you struggle with that, then I would have you go back and watch lesson 3 that we did on the psychology. And if you want to make your trading a little bit easier to follow your rules, then, that position sizing is an important component there. So let's put this in our group, the 2 green arrows, and then we'll send that order off for tomorrow. All right. So let's now finish up today by going over, if you have some questions, feel free to chat those in. Um, and after the class is over, on the archive, you'll see a YouTube comment section. You can post your questions there too. If you have some comments or questions about the class, things you'd like to learn or see, you can chat those in and I'll take note of those. I look at that every day. All right. So let's go back to our slides and we'll kind of just wrap up on giving some details about these 5 different fundamental indicators here. So let's jump into the first one. Earnings per share, this is a key profitability metric. It shows a portion of the company's profit allocated to each outstanding share of the common stock. Investors use earnings per share to compare performance. If you're taking notes, that's probably one of the key components here. It's to compare performance of a company over time against who? Against their competitors. Now, a rising or higher earnings per shares typically indicates more profitable company and can lead, not guaranteed, but can lead to a higher stock price. So, what's the key thing with earnings per share? Generally, we want to see those earnings per share growing. All right. Now, you also want to take a look at other financial metrics to get a complete or more accurate picture of the financial health. Just one of these is not going to give you the whole story. All right. Now, the reason I covered earnings per share, and we didn't have that in our scan, but earnings per share is part of the PE ratio. So let's take a look at what the PE ratio is. This is a key component of fundamental analysis. You'll hear about PE ratios, all the time. And so what this really does, though, is that it helps investors determine if a particular stock's undervalued. Now, I gave you that 6 to 20 range. That is a range of PE ratios that, generally speaking, people look at and say, oh, that company's fairly valued or perhaps undervalued. All right. And again, in other industries, we may find, generally speaking, higher PE ratios. So be aware of that. Now, a higher PE ratio does suggest investors are willing to pay more for each dollar of earnings, which might have a higher growth expectation. And, as it says, lower PEs might indicate undervalue. But again, PEs don't tell the whole story. This is just one component of that big whole picture of fundamental analysis. But it is a useful way to compare companies that are in the same industry group. You can compare those industry or the PE ratio and get a feel for like, oh, this PE ratio is lower than the other companies, so this one might be a better value, or they just may not be able to turn their earnings the way they like. And so, there's the numerator and the denominator there when they're looking at price and earnings. And just because it has low PE ratio doesn't mean that's necessarily good value, and it could continue to go down. So that's one of the reasons that people like to include some technical analysis when they're looking at fundamentals, is to say, okay, yeah, it looks like it has good fundamentals, but the trend has been down for 4 years. I don't necessarily want to buy it necessarily, or a year or the last 6 months or whatever. All right, so there's price to earnings ratio. Let's take a look at also return on equity. We talked about this a little bit. The 18 was kind of the low end of the return on equity that I learned when I first started investing. You will see and hear lower numbers. I've heard on some of those stocks that might be undervalued, or they're just not a growth company. They might look for ROEs around the 10 range, 10 to 12. But ROE of 18 typically is a minimum that growth investors look for. So this is a profitability ratio that measures how efficient the company uses shareholder investments to generate profits. Now that sounds like an important thing. Is the management doing a good job of turning, my investment into profits for the company? ROE is best used to compare companies with historical performance or with competitors in the same group. Again, a lot of peer comparison when we look at our fundamental analysis. Now, a higher ROE generally suggests a company is more profitable and efficiently managed by its shareholder, or the company's efficiently managing the shareholders' capital. All right. So there's a little highlight there on return on equity. The last two we're going to cover today is on dividend yield and dividend payout. Dividend payout, this is an important factor here. If you're trading for income, which is one of those investment styles, the dividend payout ratio should be important to you, because the dividend payout ratio is the percentage of a company's earnings paid out to shareholder dividends, or shareholders as dividends. And so, on that scan that I created, I put a maximum of 80%, which for some investors is still very, very high. I think on the scan results that we got, the highest payout ratio on that list of 28 stocks was around 69%. But again, that's going to vary, but think of it in terms of, the more of their earnings that they're paying out to shareholders, the less money they have to reinvest in the company to, grow or create more infrastructure or whatever they need to do. So This payout ratio is going to be important. You'll have to decide for yourself where that comfort level is. And I think the more that you rely on a dividend, the more important this payout ratio becomes. Uh, it also indicates how much profit is distributed versus retained for reinvestment or debt, with a higher ratio signaling fewer earnings are kept by the company. Investors use this ratio to assess a dividend's sustainability. You may find, in fact, this is often brought up, if the company's paying out 100% of their earnings as dividends or more, which sometimes will happen, they may not be able to sustain that dividend. And we've talked about that. Every time we mention a dividend, we always remind you that the dividends are not guaranteed to continue and they can go down, they can be eliminated. So again, when you're looking at different industries, you may want to look at the dividend payout ratio and compare those. And again, James Boyd does a fantastic job of talking about these fundamental components in that growth and value stocks webcast on Wednesdays. All right. The last one, of course, was dividend yield. I think all of us are familiar with this. Dividend yield is just, that financial metric that shows the annual dividend. Now, remember, it's annual, not monthly or quarterly, but annual dividend income as an investor receives a percentage of the stock's current market price. It tells them how much they're getting back from the company's shares for every dollar that they've invested in the company's stock. And it helps investors assess the potential income from a stock compared to other investments. In that scan that I created, I put 2% as a minimum. And oftentimes people will use the S&P 500. There's the ETF that tracks the S&P 500 will pay a dividend. And so some people will use that dividend yield on that particular ETF as a minimum to see what stocks are performing better than that from a dividend yield perspective. All right. And so Wiley says undervalued scan for next class. Next class is actually on technical analysis, Wiley, so we won't be doing that. But there are, if you want to do some undervalued, just go to our Trader Talks page and type in undervalued, and you can probably find some webcast and or videos that we've done on running scans for undervalued stocks. All right. Now, those are the things that I wanted to cover today. We did some fundamental analysis or scanning there on the Thinkorswim platform. Schwab.com, which we didn't have time to go to today, has a great scanner, lots of different features there, and some additional details and other components that you can run, all sorts of scans on Schwab.com to find those. So hopefully that's helpful for you. What we did today is we reviewed those technical analysis and fundamental analysis, basic high-level differences. We went over some different concepts and indicators. We ran a scan. We looked at some stocks that came up there. I didn't show how to create the watch list, and it looks like we've got a minute, so let me go back and do that real quick. So on the scan page, when you get those results, just right here, go over to the little drop-down menu and do save as watch list. And then that's going to bring up a little box, and you can just name whatever you want to name it. Fundamental scan from 7/26. I like to put the month and year that I do these. Then you just save that. And then, on your gadgets, you can come over here to watch list and go up to personal. It'll be right there, fundamental scan from 7/26, and it'll have those stocks in it. So again, hopefully that's helpful for you, everybody. Thanks for being here today. Thanks, everyone, and good luck on your investing. We'll see you.